Post-market hours. Deepan Mehta is with us now. Deepan, good morning. And for a change, it was nice to see we're coming towards the end of the earnings season. But there are some positive surprises as well. Aisha, for instance, Hitachi, we were just discussing. The margins look really good. And Jubilant FoodWorks. Pizza seems to be hot again. Let me start with Jubilant, actually, because it's been several quarters of drubbing. And finally, we're starting to see some good numbers. What are your thoughts on the stock, how it's poised? Would you be a buyer?
Yeah, good morning, Surbhi, and thank you for having me on your show. Yeah, I think a good set of numbers. Like-for-like sales growth also, I think, is in the mid-teens, which is very positive. After a long time, they seem to have rationalized their operations and margins also have improved. But look at the valuation that is trading at such rich multiples. And now, I would say a significant portion of their earnings is going to come from Turkey and I think Azerbaijan, where they have got where they acquired the franchise of Domino's. So I wouldn't pay a very high P multiple for those businesses, considering that growth may be slightly slower over there. But nonetheless, I think good set of numbers. I don't think making a fresh acquisition or fresh buying is justified. But investors like us who are holding for a long period of time and sitting on profits, I think they can continue to remain invested. I think the stock has some more way to move up.
The stock has run up in the last 1 year. It's up close to about 48%. UBS says the stock run up in a down cycle now makes a case for profit booking. Goldman Sachs is a neutral call. Citi has a buy. CLSA has an underperformed call. So it's a mixed verdict coming in from the brokerages. Many of them have cited high valuations for Jubilant FoodWorks, as Dipan is. Dipan, anything else that catches your attention? Any stock which could be in focus in the back of earnings today?
Oh, I think that Eicher Motors came with a very good set of numbers and they've gained market share across the board. Even the commercial vehicle subsidiary of theirs, that also has gained market share. And most importantly, I think over the year, we saw almost a 33% increase in the export market. And if Eicher starts to do much better over there, then clearly I think it opens up new opportunities for growth, considering that competition is heating up in the Indian market and some amount of saturation also will come through. But nonetheless, I think great set of numbers, reasonable valuations also. I thought even Bharti Airtel came with a very good set of numbers. And now finally, I think the pricing power is coming back to the telecom industry. Consumers are not complaining when they are paying 15-20 rupees per month more for their mobile bills. And these are, at least telecom businesses are great operating leverage businesses. So a lot of it may flow to the bottom line. It's coming to an end of its capex cycle also. So I think in the large cap, these two were exceptionally good set of numbers.
In the Bharti Airtel conference call, which took place yesterday, the investors also quizzed them that you made a proposal to the government, the DOT, about converting AGR.
I was thinking about that. Yeah, just like Vodafone Idea, right?
Just like Vodafone Idea, right? So to which Gopal Vittal said that it's actually just exploratory in nature. We wanted to assess whether we have a level playing field with Vodafone Idea, right? You approved it for Vodafone Idea. Will we also get that approval or the green signal? So he said, as of now, it's exploratory. Let's hear back from the government and then the board will take the final decision. So it's not that they want to.
Yeah, but why not? If it's available, why not?
Not even why not, right? Like, is there a level playing field? I think that's what they wanted to assess between the various players. But let's
back on the show. Deepan, you heard the conversation we had with Tilak Nagar. This is a company that was absolutely, bombed out, big debt in their books, but they made their way back. Any view on the stock, or what do you prefer from from the beverages space?
See, Nigel, I think investors looking for new FMCG plays, I think domestic alcobev companies can really fit that criteria. Whether it's Tilak Nagar, Radico Khaitan, Som Distilleries, Allied Blenders, I think all of them have done exceptionally well. I think they're managing the state regulatory environment far better than the likes of United Spirits and United Breweries, and they're all quite reasonable except for Radico. I do like the business of Tilak Nagar Industries and massive market share in the brandy market, second largest brandy in the world and largest in India. But this entire cloud about this trademark issue, that really kind of puts a big scare, because should something go wrong over there, it will completely disrupt the operations of the company. They do not have any secondary brands as well. So on the whole, we like the industry, but Tilak Nagar, I'm not so sure because of this particular legal case. Although I do feel that Allied Blenders and even Radico Khaitan, Som Distilleries, I think they have great prospects going ahead.
Okay, all right, got that. So not particularly Tilak Nagar, but other companies, couple of companies like Allied Blenders could look up. Got up. Deepan, I want to ask you about Eicher Motors. From the frontline pack, that came out with a set of numbers. The commentary was a little bit positive as well out there. How would you view the stock from here on?
Yeah, I think that, we were doing a quick analysis of the Nifty companies which had high teens growth in the last 10 years. And there were just 4 or 5 of them, and Eicher Motors was one of them. It went through a lull, I think, 3-4 years ago, and then started picking up, I think, from this year onwards. I'm particularly impressed with the progress made on the export markets, because if they do well over there, it opens up new opportunities. Reasonably priced share, I think. And certainly, even at these levels, despite there being some slowdown in the auto industry and two-wheeler industry, I prefer Eicher Motors. It's a great rural play also. So if monsoons do well, this company also should do much better. Having said that, it's a company in which we and our clients are invested in.
Just a reminder to our viewers, yesterday in the second half of the session, the entire railway pack suddenly got turbocharged, and that included all kinds of stocks from an IRFC to RVNL to, the entire likes, even some of the private sector names. Deepan, just your thoughts here. I mean, I'm not sure if that was just a flash in the pan because in general PSUs were up, or whether they're sensing something. But would you be looking at any railway stocks at this point?
Not really. I think they're fairly valued, and it's an old story, pretty much well discounted, well understood. These stocks move up and down based on order flows and performance. But no doubt, I think railways are going to invest more and more in the infrastructure, and that's going to benefit these companies. But I think amongst the entire investment theme, I think IRFC certainly is something which is quite interesting, given its position and given the new opportunities it has got to increase its loan book.
Deepan, hold your thought. We'll slip into a very short break. We'll come back and also get in a few technical trades. Stay tuned.
Back to that conversation with Deepan Mehta. Deepan, hi, morning. So we discussed railways earlier, and you made that point that this could probably just a sentiment-based move. But now let me ask you about defense, because this defense rally is something that you can't ignore. The index is already up 8% in the last 3 trading sessions. And we know that the orders are coming in. That's not the problem. And the narrative, the theme, all of that is fine. The question is figuring out where the P&L looks the best and the valuations aren't too high. So do any stocks meet that criteria for you?
What are you saying? 8% in the last 3 months. It has gone up by 45%. The Nifty India Defense Index, if I get it right. And look, I think these stocks are in focus because of what has happened at the border, and a lot of investors also looking to increase their exposure there. But it's a small portion of the overall market capitalization, about 2% or so. And all of the stocks over there are really, really expensive. This is not a business that you can quickly scale up and keep on doubling your profits every year or so. So investors need to temper their optimism. It's a great sector to buy when the chips are down and when there's a correction, when it is not in the limelight, as it does happen from time to time. But buying these stocks at these levels, I'm not sure the risk-return profile will favor you. The PEs are so expensive in the range from minimum 40 to 100 times or so. And buying businesses at those PE multiples, 2-3 years down the line, you realize that the profits have come through, but the stock price has not made any great gains. So I would avoid all defense stocks at this point of time. It's a contrarian view, but I think it's a conservative view.
Okay, all right. Deepan, I was so happy to hear after a couple of years that you were interested in cement. Yeah. And that call's actually playing out well, because otherwise we don't have too much in common besides understanding the market. Because metals, so you don't like. But luckily for me, cement is something that you found some interest in. Actually, the last couple of numbers have started looking up. I recall on Editors Roundtable as well, I'd put up this piece that maybe cement could be the pocket that will start surprising, because not affected by Trump or any kind of global activity. What's your view on the pack? Shree Cement came out with a set of numbers. It's a good set of numbers. The problem for Shree is valuations. But your take, and what's your top pick?
See, Nigel, it's not just cement that we now have commonality, but for many, many years, we have been very positive on Eicher, you for its motorbikes and me for
I came on it.
But nonetheless, I think cement prospects are looking up. It's a cyclical industry. And certainly, I think the upcycle has started for the cement industry. execution across the board will improve, whether it's for infra projects, whether it's for real estate projects. And that I think will improve the demand. Also, they're getting some benefits on the cost side as well. And overall, I think that the industry is getting a little bit of price discipline in place as well. Top picks have to be ACC Ambuja, I think best in class performance. And there's an opportunity here in at least in ACC to improve the efficiency, which can flow to the bottom line. So I would prefer those companies rather than the super efficient player like an Ultratech or for that matter, Shree Cement.
Okay, got that.